Hello everyone, Maurice and welcome to Tanks Invest. Talk about investing, finance, fresh development. For today's series, times only. The investment I'm going to talk about today will be Tesla, ticker TSLA. So it's been a while since I last covered equity. As you know, I typically cover Ethereum and other crypto assets as a whole. In respect to Tesla, as I'm recording around 12:35 p.m. on the Eastern Time, current trading like the $646 level, down about 1.32%. And it's been kind of a volatile couple of weeks so far with respect to Tesla, and obviously with respect to a volatile couple of quarters so far, right? Hitting that all-time high at $900, in the previous months, and then subsequently with respect to the sector rotations, the inflationary scares, the negative Fomc and the CPR reports, on top of the chip shortage, obviously have been driving a lot of selling pressure, hitting at one point the $573 level, right? And it seems like we are slowly recuperating, kind of hovering back up to test around the $647 level currently. But we're basically between the two levels, right? The $664 and the $625 level, which is a core resistance level we've identified in the technical analysis. If you watch my videos that I posted long ago, and it seems like it's confirming, right? However, with respect to the earnings, it's expected to happen on the 26th after market hours. Basically, it's next Monday. So on top of the fact, we know that the FOMC meeting is on the 28th. So it's going to be a volatile couple of days coming up. So I'm going to go through a technical analysis on what I see is going to be happening going forward for Tesla as a stock, knowing the fact that it is a relatively large holding in my portfolio. I currently hold about 1,125 shares of Tesla at a cost average about like 300 something dollars. So I'm relatively lucky to have that sizable position, but we should see a couple, volatile couple of days coming up, right? So stay tuned, stick around, let's make some money. All right, going through the technical analysis for Tesla ticker TSLA. I'm recording us of 12:37 p.m. on the Eastern Time. Current trading like the $647 level, down about 1.18%. You can see on the crypto side, we are basically anti-correlating right now. That's why the whole crypto market is up today, which is the typical anti-correlation effects that we've been talking about, right? So it's very logical what's going on right now. And with respect to the sell-off that we're experiencing right now, we do expect a couple volatile days coming up, especially tomorrow is a Friday. But knowing the fact that today is a relatively red day, I should see some more of a normalization coming up tomorrow, ahead of the weekend close off. And then Monday is obviously the earnings for Tesla on the 26th, right? So what do we know so far, right, with respect to Tesla? We know that Tesla has beat the Q2 delivery. And also with respect to the supply and demand dynamics of Tesla's vehicles, it seems like there's an imbalance, right, with respect to the shortage. It's not being able to sustain because of obviously the fact of the chip shortage that we're experiencing globally. So it could be an interesting affectation going forward. We need to learn more from the management team about the specific numbers around obviously delivery, obviously around demand, which I foresee is going to be, basically beating Wall Street estimates. But what is the supply issues that we are still kind of cultivating and trying to fix going forward, right? Especially on top of the fact the Chinese tension that we're percolating slowly and slowly, and also on top of the fact that inflationary pressure that we should be expecting, especially the fact the 28th, which is basically 2 days after the earnings call, is the FOMC meeting, right? So we don't know how the FOMC meeting is going to come out, right? We don't know how Janet Yellen is going to be, or Jerome Powell is going to be talking about the inflationary pressure or anything around quantitative tightening. What's the timeline going forward, right? We know that we are expecting that to happen, and I think Jerome said something about like 6 to 9 months out from now. But in terms of any confirmatory dates or how is that going to be progressing going forward, I don't think we have any confirmatory specific timeline on the calendar that we can hedge right now, right? But we know that's coming, right? And I think based on, I think Wall Street is basically going to ask these couple of questions, like one, chip shortage, two, supply and demand with respect to the dynamics of being able, for Tesla as a company as a whole, its inventory be able to sustain the demand from customers. And obviously, with the inflationary pressure, right? I think people are screaming that the market's going to crash. The market's going to crash. I mean, if you look at the technical analysis, we were kind of stretched up, right? But we normalized a little bit because of the corrections that we've had in the last week so far. It wasn't like a sudden 1 day drop, but it was like a progressive type of a gradual dip, right? So I feel relatively good, and especially on top of the fact that the sector rotation should be happening ahead, during the, basically late Q3 to Q4, that time shift, that typically is what was going to be happening amongst hedge funds, for the window dressing, but also with the Santa Claus rally, right, ahead. And Q3, Q4 are typically good quarters for automakers, and especially knowing the fact that Tesla is one of the prominent players in this space. So I feel relatively confident. So with respect to a more of a tactical perspective, what level should we be dollar cost averaging at, right? I think if we have a negative couple of days on the 26th and obviously on the 28th, right, we'll go down to the 625 as the first level, which we have drew the yellow line here, and I haven't really changed anything here. It's still in the same bracket, same pattern that we're experiencing right now. So 625 would be the first level dollar cost average. Would I be buying now? I don't think so. Should I be buying a call or should I be buying a put right now? I would say that's relatively risky. We're not wizards and we don't know how the investment sentiment is going to come out afterwards, knowing the fact that we have two relatively major macro black swan unknown wild cards at the moment, right? Again, the earnings call and the FOMC meeting, right? We don't know the outcomes of those. And based on historicals, has always been negative, right? Every single earnings call, we have that percolations to pump up and then sell off from there for Tesla stocks, and obviously same thing comparable to, FOMC dynamics at the same time. So something to be mindful of. So again, right, 625 with the first level dollar cost average, and then the next leap down would be obviously the 600, which is the flat number that investors typically buy at. That's why you see some consolidation. But again, that's not really a substantive level, right? That's just really a level because people are eyeing that flat number. But the true level is more like 673, and that will be the bottom, basically. And we've been testing that, we're confirming that. I don't think we actually go below 500, to be honest with you, because by then we will be so depleted, like what we were happening back in the day on the 13th, which was that big dip because of the negative CPI report that we got and negative inflationary pressure from the Feds, right? Something to be mindful of, and those are the frames I will be risk mitigating going forward. All right, just to recap all the numbers in the technical analysis, again, the 625 is a more resistance level that we should be consolidating at going forward as we are further leaping down. And that's the level that would be ideally DCA at, right? And the next level will be 605, but again, 605 is more just a flat number, the 600, right? So it's really up to your risk appetite going forward. And if we have a really negative next couple of like days or weeks coming up on the 26th on the earnings, and then a negative day for the FOMC meeting, we might potentially test the 575 again. So something to watch out for. Would we be chasing the pump? I don't think that would be the ideal because that will be an emotional play. So these are the risk mitigation level that you want to be looking out for. But with respect to corporate adoption, not corporate adoption, but with respect to the price target for year end 2021 or the next 12 months from now, I think $950 based on a discounted cash flow analysis perspective, that makes a lot of sense. And I've done a lot of work onto understanding the growth and the value creation plays that we haven't even identified that is being encapsulated into the model yet. That I think 950 is a relatively conservative level. Upside 52%, 1.5x your money if you buy at the $625 level. Alright, so that's it for today. Respect my technical analysis on Tesla ticker TSLA. Hopefully this is helpful. I know that I wish I have more time to cover both equity and crypto every single day, but my time is so limited and I wish I have more time of the day and more energy. It definitely takes a lot of energy and effort to be putting these videos, while at the same time do my full-time jobs that I currently have. I have multiple jobs that I do on a daily basis. I feel like I'm never not talking. But I'm so happy that caffeine is my friend and is able to sustain my energy level. And also sleep relatively early. I go to bed at like 10 or 9:30 or 9:45 every single day. So early sleeper, early riser, if you may, right? So hopefully this is helpful, and feel free to ask me any questions if you have any questions coming up. And stay tuned for next coming up. Take care. Bye.